Hi, welcome back to Elements in Focus. My name is Aaron Rheaume, Director of Financial Planning, and I've got Grant Soliven on with me today. Many of you know Grant because we have been recording these videos for years. How are you, Grant?
I'm awesome, Aaron. Glad to be doing this like always.
Yeah, good to see you. Most of you watching are probably from the Indiana area, but we do have families in over 30 states. And so at the time of this recording, the weather here is absolutely beautiful. I've got some sunshine on my face. And we're going to dive right into the topics today. For those of you that are new and are just tuning in to our Elements in Focus video series, this is where the advisor team will break down topics in our 5 critical elements that you can see on the screen. And so we cover everything from your life after work, which is retirement planning, all the way down to legacy planning. And that is helping families get through and all the way through their financial journey. Today, we're going to talk about the investment playbook with a caveat of if you want more detailed investment content. Every Thursday, our allocation team sends out what's called the Market Carver, where they'll talk more in detail about what's happening economically, what's maybe happening as a trend change inside of our portfolios. So if you want to know more in-depth conversation about the markets and the economies, tune in Thursday, 11 o'clock. That's when that goes out. So Grant, I'm going to turn it over to you. We're covering investment playbook. What in the world is small cap investment strategies?
Absolutely, Aaron. Thanks for teeing me up on this. So for those of you who have not engaged in the investment world, maybe as in-depth as our portfolio managers, there's types of industries that you can invest in, types of stocks you can invest in. A common one talked about on MSNBC and other market channels are small caps. So let's define what that is first. So a small cap investment company is based on this term called valuation, meaning the value of their profits and revenue generated meets an X dollar amount based on what the indices like the S&P deem as their appropriate value. And then you have medium-sized companies all the way to large cap companies. Large cap, for example, some of the ones we all know well that are especially in the news today, large caps, Apple, Nvidia, Tesla, right? Big companies that have big names. The small cap companies are the up and comers. So that's a general idea of what a small cap investment is. So question, Aaron, why would you invest in a small cap company? Well, traditionally, small cap companies have the greatest room to grow, right? They haven't hit their elephant size, their balloon size, where everything is now stretched and it's harder to get bigger and to get more market share. So small companies can offer opportunity and growth potential. They also, on the positive side, have more volatility and risk, meaning there's more upside. Again, because of their runway, they tend to be able to outperform, right, in certain market environments. Now, that said, especially in the market conditions we're in today, I'd also caution against just overloading small cap investment strategies because they have the most wiggle room to run, because small cap companies tend to suffer the most when it comes to recession-like environments, to uncertainty like we're facing today, because they don't have as much leverage. They have less access to capital for lending purposes to keep their operations running. And so a lot of times you find these smaller companies struggling in harder economic events. So just something to pay attention to closely is that if you're thinking, hey, I've read something about small cap companies, they have the most potential to grow. They also carry some of the greatest risk, especially in uncertain market and economic times. So just a little quick way to look at small cap investments. Believe it or not, there's also a lot of other ways you can invest in small caps besides the open market, like the NASDAQ or the S&P 500 or the Russell 2000, etc. You can buy things through private equity, right? And there's reasons why you'd use private equity small cap, because traditionally there's less regulatory oversight, which sounds like a bad thing at first, but sometimes that creates a lot of cost that other small cap companies don't have to endure in the private equity side. And we can also talk to you about that in your portfolios. Or if you're thinking about using small cap, please don't hesitate to give us a jingle and let us know that it's something you may be interested in, how that fits in your overall risk tolerance. So, Aaron, that's what I would say about small cap in a nutshell. Anything you want to add?
Just maybe more on the technical side, and Grant, you did a great job. When we say cap, we're talking about market capitalization, and we can go into a deep dive on what market cap is. We're not going to go there. All market capitalization is it's the number of outstanding shares multiplied by the price of stock. And small cap companies tend to be somewhere between 250 million and $2 billion in market capitalization. That's just kind of a general rule of thumb. Grant covered that in great detail. Usually they're more susceptible to risk when we get into economic downturns, but they need to be a part of a portfolio. And just with anything that we do here at FEG, you have to have diversification throughout the portfolio, and small caps at times are a piece of where we go to for that diversification. If you have questions, if you want a review of your investment portfolio, especially in a term of economic downturn, now is the time. Now is the time to have a review of your investment strategy, making sure that it's keeping up with your income needs, making sure that your diversification and overall strategy is based on your actual risk tolerance. That's one thing that we see a lot of times is undue risk inside of portfolios. Please schedule a meeting, 800-928-4001. Send questions to talktofeg@yourlifeafterwork.com. You can schedule that next steps complimentary meeting. That's where an advisor on our team will sit down with you for an hour and a half, give you things to think about today, things to think about in the future. And if we decide to partner together, we'll have a written plan for how FEG can help you on your financial journey. Again, if you have questions, please submit those questions with the details that you can see on the screen. Thank you so much for tuning in. We look forward to seeing you on the next one. Have a great day.